Do you ever wish you could just sit down with a CPA and ask him the questions you would like regarding your business? Well, today you will have that opportunity. So stay tuned as we supercharge your accounting. Welcome everyone to Supercharge with Emily Momentum Monday and our special series, Ask the Expert. And today's expert is Ahmad, CPA. Assad is joining us from Orlando, Florida, and he'll be sharing with us his expertise on all things accounting, especially if you're self-employed and want to know some best practices. This is the opportunity you probably have been waiting for. It has arrived today. So please join me in welcoming Asad Ahmad. Yay, yay. So happy to have you here with us today, Asad. How are you doing over there?
I'm doing great. Thank you so much, Emily. Thank you for having me today. I really appreciate that. I know we met at SBDC a few months ago, and it was a pleasure meeting you, but I'm so excited to be here today.
Absolutely. We met at our annual conference and our small business conference, and it was just great to see someone with the energy that you have regarding accounting, which I have to tell you, for many people is not the most exciting topic, okay, just to be honest, but you kind of brought this excitement to it. So I'm like, I think he can really energize and supercharge our audience regarding the basics and the importance of accounting principles that we all need to be aware of as business owners or self-employed individuals. So, before we launch in, I want to remind everybody not to forget, take the time to go ahead and hit the subscribe if you're watching on YouTube at Supercharge Coach. Like, comment, share, engage with the post on LinkedIn and Facebook and everything like that. And tell a friend, tag a friend who could really benefit from accounting best practices today, because this is really valuable information. So we're just going to jump straight up on into our topic. Like, if you're self-employed, some best practices you need to keep in mind. So Asad, start off by telling us, how did you become a CPA in the first place, a certified public accountant?
Yeah, so I went to school at UCF. I graduated in 2017. I wanted to study accounting because I thought accounting was the language of business, and it made a lot of sense because I wanted to run my own business. I wanted to be an entrepreneur at the end of the day, and I wanted to really understand the language of business. And you can't understand the language of business without truly practicing and understanding the language of business, which is accounting. I took accounting at UCF. I got my degree, got a master's in accounting, and then I started working for an accounting firm called Verizon. Actually, not an accounting firm, but it's a Fortune 20 telecommunications company where I was doing accounting, and I really enjoyed that. Then I started working at Deloitte. Deloitte is a international tax planning advisory consulting firm, and that's where I specialized in international tax, worked on a lot of S corporation tax and partnership tax. I also have experience working at an investment bank called Houlihan Lokey. It's a boutique investment bank, not as big as Goldman Sachs or Citibank or JP Morgan, but it's a pretty big bank based out of New York City. And I worked there for about a few years and I gained a lot of great experience. But a few years ago, me and my partners decided to start our own firm called the FitBiz CPA Group. Our team has over 40 years of expertise, and that's how I am where I am today, and just love helping people and love being a CPA.
That is very excellent. So UCF, for those who may not know, is the University of Central Florida. So as I mentioned before, you are based in Orlando, Florida, but you work with clients around the country, right, Assad?
Yes, yes, absolutely. We are headquartered in Orlando, but we have clients in Miami, Tampa, Jacksonville. We have out of state clients. We have clients in Texas. We have clients in New York, clients in California, Washington.
Hmm.
So a lot of different services for different types of clients.
So, with that, let's start by saying how should a small business owner go about selecting an accountant? And we want to make the distinction, if you could, also between a CPA and just maybe someone who calls themselves an accountant, but they're not a CPA. So, can you give us some thoughts in the selection process to start off with?
Yes. So if you are going to select an accountant, make sure that they have a lot of experience. Make sure that they understand bookkeeping and they're good at understanding the tax side. Generally, you don't want to hire just an accountant who's not certified to do taxes, because people who are not certified to do taxes aren't going to have the same knowledge base that a CPA would. The CPA has gone through four very important examinations, which are business and ethics, auditing, regulation and tax compliance, and financial accounting and reporting exams. For exams, they have to have 1 year of experience signed off by their supervisor, who has to be a CPA, and they may have experiences in taxes, tax planning, accounting. But most importantly, CPAs work a lot of hours. So they have a lot of experience working on different types of clients in a very limited amount of time. So an accountant who may have experience of 10 years may be equivalent to a CPA who has worked at perhaps a big four accounting firm for only a couple of years, just because of the bandwidth and the differences of clients and the amount of sheer volume of work they've completed. It's always good to go with a CPA firm rather than just a regular accountant or a EA or a tax preparer.
Hmm. So I know a lot of people, as I mentioned, kind of can confuse the whole idea with the CPA versus just a regular accountant. So thank you for highlighting that, because that's something that we really need to understand. So if we're starting a business, and again, focusing on the self-employed right now, it could be a solopreneur or maybe it's a couple of people working together. What are some of the best practices to prepare yourself as you launch to cover your bases from an accounting perspective when you are starting out? Or even basis checklist period for regardless of what stage you are.
Yeah, absolutely. So it all depends on the stage of your career and where you are and where your business is. Some businesses do not need a CPA, and here I am, losing business here. But I don't think some business owners don't need a CPA because they're maybe making 30 grand a year or 40, 50 grand a year, which is great money for somebody starting out. But maybe they need to grow their revenues because maybe the CPA doesn't have to be the biggest expense on their books. But if, let's say, if you're making over 100 grand, 120, 150 grand, you need to hire a good CPA. Because if you stay as if number one thing you need to look at is converting to an S corp. If you're not an S corp, you're going to pay taxes. You're going to pay a lot of taxes. What an S corp generally is, it eliminates the self-employment tax of 15.3%. And instead of paying over 30% in taxes, boom, you've already reduced it by over 50% just by becoming an S corp. Number two, you need to have your CPA or bookkeeper put you on a payroll system as an S corp. So an S corp is basically a company that employs W2, employs you as a W2. So you get a W2 from the S corp, uh, which also gives you a K1. And that K1, that ordinary income, profit, and loss, flows through to your 1040, which is then taxed at the federal taxable income brackets. But the key here is that you're eliminating the 15 and a half self-employment tax by becoming a employee of the S corp. So that is important. Number three, you need to have good bookkeeping. You need to have a really good bookkeeper, either in-house or you need your CPA to do your bookkeeping for you. I recommend having a CPA because they understand what the financials need to look like for them to be tax ready. And for them to be tax ready, they need to be properly categorized, reconciled, classified, and closed out for the year as of December 31st. Once you have those three things down, then we can look at number four, which is making sure you're doing a lot of purchasing of expenses, equipment, business expenses towards the end of the year. That's where you need to really dig in and figure out what you can purchase December, October, November, December, so that that'll be a write off when we file your taxes in 2024 for 2023. Number five is the next best thing you can do is setting up a 401k plan, because 401k plans, solo 401ks, SEP IRAs, or whatever retirement plan you set up, the contribution is generally going to be deductible. And that deductible contribution lowers your taxable income, and thus you end up paying lower taxes. But also, if you make contributions to those retirement plans, that's going to help build up your war chest for the future, so that oftentimes as a business owner, you're not employed and you don't have that 401k, solo 401k, SEP IRA set up, and having the S corp set up the payroll, set up the solo 401k or the SEP IRA, and you can make contributions up to April 15th. That's going to provide more savings for you. So those are five things that I would really look at as a business owner.
Wow, Assad, that's quite a list. That's quite the list. So here's the thing. One I normally recommend when someone is freshly starting out. Now you made the distinction between their earning levels, which I understand as far as an ongoing situation. But if someone has a very sound business plan and they want to make sure they're doing things right from the start, what do you think of them making an appointment to visit with a CPA to make sure they understand the checklist you just explained so that they can prepare to grow into it if they're not even there just yet?
Okay, well, I would, if you want to come in for a consultation, the number one thing I would do is come with your prior year tax return. Even if, even if you know, even if you didn't have a business prior year, you still need to bring that 1040 return in so that we can do an analysis. Then, if you do have your QuickBooks set up or whatever bookkeeping software you're using or Excel, you need to bring those income and expense spreadsheets with you. Sometimes some business owners I've seen don't have income and expense spreadsheets. They don't have P&Ls, they don't have QuickBooks. Then I recommend bringing in your bank statements, January through December. Whatever bank statements you have for business only, not personal, I'm talking business. Business bank statements, you bring those in. We're going to take a look at it. We're going to do our analysis. We're going to see what we can, what kind of bookkeeping you need, and then we'll go from there. So, again, prior year tax return and income and expenses. I hope that answers your question.
Yes. So again, it depends on what stage people are. So somebody, if they're fresh out the gate, if they already started, well, obviously that makes sense and that's a perfect solution. But if they don't even have business expenses yet, I mean, they literally are a startup blank out, and I know there are different stages of startups, then they could still bring maybe their projections or maybe bring their business concept. Is that fair to say? Or
Yeah, they can bring in their business plan. That's a good point. If they have a business plan, they can bring that in. They can bring in their financial plan if they have cash flow projections or cash flow forecast. Obviously, yeah, business plans are foundational. You know, we had a business plan when we started our CPA firm, but we never really relied on it too much because numbers fluctuate, numbers change, and you always have to adjust the business plan. But if somebody's very new and they don't have anything with them, then yes, having a business plan, having a credit reporting history, having a forecast of revenues, projections, that would be great. We personally cannot do that for a client, especially if they don't have revenues and income of 1 year, at least 1 year, because it would be against the standards of the AICPA. But if they have their own forecasts and projections, that's great. We can look at that.
okay, so a few things here. There's so many different questions I can ask you, but let me start off with selecting accounting software, and then I'm going to come back to the owner's draw and the payroll question. So selecting the accounting, a lot of people obviously use QuickBooks, especially in the US. I know overseas, maybe in Europe, they use Xero or in different places. How would you recommend someone select an accounting software? And do you have any recommendations on what you would recommend?
Yeah, so there are options, right? I think QuickBooks is the most robust option because it allows us to create a P&L and a balance sheet, especially if you're other softwares do that as well. But the categorizations, the chart of accounts that the QuickBooks software allows us to create provides for better, more clear, concise financials when it comes to tax time. We've dealt with software such as Zero, FreshBooks, Yardi, uh, all kinds of softwares. Wave is another software that a lot of IT software solutions companies use. But QuickBooks is the most robust one. It costs about $15 a month, and it's not too shabby.
Yes, yes. So when you I know for a lot of people when they select software like QuickBooks, there's the QuickBooks Desktop and Online, and it can get a little pricey. So if you have to make an investment in the software, you know what did you say, when is a good time to invest in accounting software?
I, I would say start making that investment right away. The reason why I say that is because it's going to bulletproof you against an IRS audit. Let's say even if you're not making a lot of money early on, I think I think having a system there that is not just it's just not just run of the mill kind of a system that'll help you bulletproof you because business expenses, these are business expenses, right? Even if you make 40 grand, 50 grand in the first year, you'll have sufficient business expenses like mileage, like purchases, like costs, business equipment, things like that, that'll reduce your taxable income at the end of the year. Now, if you made zero income in the year and all you had is business expenses, and you don't foresee yourself making any money in the first year, then that's a different conversation. And if you want to stay very lean and you don't foresee a lot of volume, a lot of transactions, then Excel, which is free, is another alternative for you. But let's say you've been using Excel and suddenly you start making 50, 60, 70, 80 grand every year and you're not using QuickBooks, then your CPA or bookkeeper has to then go in there, look at all your bank statements, categorize them, classify them, and QuickBooks Online provides the best software to categorize and classify so that your taxes are sufficiently providing you with proper savings. Your CPA is providing you with proper savings at the end of the year.
Okay, excellent. So now let's talk about the selection of corporate entities a little bit. Now, I know last week we had Nico Applebaum, who was an attorney, speak to that from a legal perspective. Now, how would you recommend to someone to choose between an LLC or an S corp or a corporation from an accounting perspective?
From an accounting perspective, I believe that the best entity structure is the S Corp. Attorneys do not agree with that because they are coming from a liability perspective. And the limited liability perspective structure is best in C corporations, C corps. Problem with C corps is that there's double taxation. There's taxation at the owner level, the shareholder level, and it just doesn't prove the most tax efficient. The S corp, on the other hand, is eliminates taxes because if you're not an S corp, you're just a Schedule C, which is a sole proprietor. You then have to pay 15.5% additional taxes on top of your federal taxable income brackets, which could be 12%, 15%, 18%, depending on how much income you have. So you're potentially paying over 20 to 25% in taxes every year if you're not an S corp. The S corp is the best structure to be at. Obviously, if you're making less than 50, $60,000, it may not be wise for you because you will have to pay a CPA money or a CPA or a tax preparer to prepare that return, and depending on your appetite, it may not be worth it. The reason why I say that is because the Schedule C 1040 already has certain deductions and write-offs that can sufficiently reduce your taxable income and provide you with savings. But if you end up making more than 50 to $60,000 in a given tax year, it's beneficial to look at converting to an S corp because that'll save you more in taxes versus just being a sole proprietor. Now, if you're going to start a business with a partner, that would the state of Florida automatically classifies you as a partnership. 1065, that's the return, and you get a K1, which basically has your income and expenses, which flow through to your 1040. Now, partnerships and S corps are great, but at the end of the day, the S corp is the best structure.
So when you say partnership, do you mean LLC? Is that what you're referring to,
Yeah.
or is that fair to
Yes,
say?
that's exactly what it is. It's an
Oh,
LLC. It's a multi-member LLC. So you've got husband and a wife, or you've got husband, wife, partner, whatever it is. The state of Florida automatically sends you a notice from the IRS stating that you will be taxed as a partnership, and you have to file a 1065 in that year uh, for that return.
so
So
what
that's a
about
part.
it's a partnership? Okay, so I know a lot of small business owners automatically tend to file LLCs or incorporate as LLCs, and so but you can do an LLC with an S corp election. So so could you speak to that versus just being an S corp outright? Do you have the still the benefits of an S corp if you do that?
Yes. Yes. Yeah. Absolutely. So. Um, a lot of the times, what I have seen is people are operating as sole proprietor LLCs for years, and they aren't taking advantage of the S corp election because their accountant or their CPA hasn't showed them how to do it. You basically go to the IRS's website, irs.gov, and you type in Form 2553. Once you type in that form, it'll come up. The form will come up. Then you take that to your tax preparer or your CPA and you fill it out. You can even fill it out yourself. It's basically going to ask you for some basic information. It's going to ask you for your name, your address, your EIN number, basic things like that. And once you have those basic things on the form, you then submit that form to the IRS and you basically put in a reasonable cause for the late election. You'd let them know, hey, listen, my prior CPA, prior accountant did not help me make this election. This is a late election. The IRS will understand. They're very forgiving. And then let's say you made the election in June of 2023 or August of 2023, and you want to be taxed as an S Corp as of January 2023. The IRS will take its time, review, look at your LLC, look at the articles of filing, and then they'll send you an approval letter within 8 to 10 weeks that you have been approved to file as an S Corp from January 1st, 2023. Once that happens, boom, you set yourself up with a payroll software, uh, Gusto, whatever. But that late election filing 2553 S Corp is definitely doable as long as you get in touch with a CPA. And you should have gotten in touch with them in August or September, and they would have helped you do this exact thing.
So, so Assad, for a lot of people, like I said, our conversation right now, a lot depends on where someone is in their process. If they're already up and going, then they can kind of plug in some of these things. But if they haven't started or they're on the verge of starting, this helps them to realize some of the things they have to keep in mind. So, can you also highlight the concept of the payroll when you have a S corp election? Is that what allows you to do the payroll versus owner's draw? Can you, for an
Yeah,
LLC? So, usually for LLCs, you don't do payroll if you're the owner. So,
yeah,
can you explain that for us so people can understand?
yes. For LLCs, you don't do a payroll draw, a payroll setup. For an S corp, you do a payroll setup. And with that S corp, basically what happens is you can put yourself or your spouse and your spouse. But if it's just you, solo company in the S corp, you go to a payroll company like ADP or Gusto or QuickBooks or any one of those good companies, and you sign up for their payroll system. The payroll system essentially pays you a monthly salary, a reasonable compensation. So let's say your reasonable compensation is let's keep it simple. It's $3,000 a year, right? You're paying yourself 3 grand a year, and you made, let's say, 60 grand in the total year. So if you pay yourself 3 grand a year,
Is it a year or a month?
sorry,
Uh,
per month.
Per month,
So
okay.
you pay yourself 3 grand per month, which is 36 grand. right? You have a salary on the books for 36 grand. 36 grand, you pay quarterly taxes on that. You pay quarterly taxes called 941, 940 RT6. And ADP or QuickBooks or any other software company will then process that payroll. But once they're processing that monthly payroll for you or biweekly payroll for you, they're also processing quarterly payments to the IRS. These are called quarterly estimated payroll payments. Quarterly estimated payments are being taken care of by the payroll system so that you don't have to take care of them yourself. Once you do that, once you do those quarterly payments, 940s, 941, RT6, uh, which is, it's going to be a few $100 if you're paying yourself $3,000. Wouldn't be more than $200-300 a quarter. Well, maybe more, maybe closer to $600 or $700 if you're looking at $3,000 a month of salary. Once you do that, so you're already taking care of your quarterly taxes. You're good to go, and you can take so remember we said that we made 60 grand this year. So from that 36 grand that is declared as your compensation for the year that's on payroll, the rest of the money, the rest of the 24 grand from that 60 grand is now a distribution to you. And distributions from an S corp are tax free. So you do whatever you want to do with that money, right? You can invest it in the business, you can use it for other expenses, whatever you need to do. That is your money tax free. That is the advantage of using an S corp. So you're only paying taxes on 36 grand versus paying taxes on 60 grand.
Yeah.
And again, if you work with a good qualified CPA, they're going to show you how to do that. Plus, they're going to have deductions and write offs that are going to be added on to those year end planning. They'll dig up expenses in January and February, and you'll probably end up paying zero in taxes versus somebody else who did not do the planning, did not do the S corp elections, did not put themselves on payroll, and they're going to be on the hook for paying maybe 20 to 25% of that 60 grand in taxes.
So the question I have to follow on to this is just to make sure I fully understand. If you're an LLC and you do an S corp election, you can then do payroll, or is it still owner's draw status?
It is still owner's draw. You cannot. There's no payroll. You're not paying any payroll taxes. LLCs are not. There is no owner's draw. There's only owner's draw. There's no payroll. There's no reasonable comp. There's no distribution. There's just simple. You're doing an owner's draw to pay your whatever expense that you need to pay.
But if you have employees, you will have a payroll for the employees. Just you as the owner
Yeah.
cannot be on the payroll, right? Is that
Yes.
the distinction? Just wanted to make sure that's clear.
Exactly. Yes. When you have employees, you can do W-2 employees, 1099 employees. You can go on ADP. You can have employees. You can pay them payroll, but it's not the best tax efficient structure because you're still paying yourself you're still having to be on the hook for the taxes that you are going to have to pay the IRS at the end of the year.
Now, one thing I'd also like to highlight, even though you mentioned that there are payroll entities like ADP and even QuickBooks and so on, you are also able to do it yourself if it's just you and you want to, right? You can do this yourself. I have done this myself where you do go through the things. Obviously, it gets easier when you go through a company because it's easy to forget some steps if you're not used to it. But it's not that you cannot do it yourself. You actually can, if you want to kind of save money on those kind of expenses up front. But eventually, I normally say when you're more than one person, you're making a certain amount of money, then you would want to certainly get that facility. Is that fair enough to say, Assad?
Yes, if you are making a lot of money per year as a business owner and you don't want to deal with the headache and the problems and the compliance, you can delegate this to a payroll company or give it to your CPA or bookkeeper who can then handle those duties on their end. They can set up 1090, they can send out 1099s, they can set up W2s, they can do all of that.
Okay, great. So, Assad, can you give us a little summary of a rundown for, say, end of year? We're coming up to end of year now, and things that people should be preparing to do as they wind down the year. And let me just say before you share that, again, people, make sure you subscribe, like, and comment. Thank you. Okay, now back to Assad.
Absolutely. So, the number one strategy that you can do is deferring income, right? So, if you defer your income, let's say to next year, instead of recognizing all that income in the current year, what you can do is try to defer some of it to January or February. That's called an income shifting strategy. That is one thing that a lot of our business owners have done, where they have been able to reduce their taxable income for the current year. Second strategy is to accelerate your deductions. And the acceleration of deductions is done through, again, like I mentioned, the retirement planning is one piece of it. But in addition, you can also do the write-offs, right? You can do the business equipment purchases. You can do business expenses. You can incur a lot of business expenses towards the end of the year, and then when you sit down with the CPA, they'll dig up expenses in January and February. That'll be a good way to kind of reduce your taxable income for the year for 2023. And then you can also look at making charitable contributions, charitable deductions. Charitable deductions, you can get a deduction of up to 50%. And if you have excess charitable deductions, then you can carry those over for the next 5 years.
Hmm.
That's an additional deduction you can look at. Another strategy is, like I mentioned earlier, the 401k, setting up a SEP IRA. SEP IRA is big because you can get 25% of your taxable income as a write-off for the year. And again, you can make the election on the return, but you don't have to make the contribution till April 15th of the next year. So that's the good news. That's one strategy. Another strategy is taking advantage of the Section 179 deduction. That is any equipment you purchase, you can write it off completely. And then another great strategy is if you're a real estate investor or a real estate landlord and you own property, you can look at bonus depreciation. Bonus depreciation is basically where we accelerate the expenses from your property and we try to write off more of it in the first year versus doing it over a straight line. So those are just some of the strategies that you can use to mitigate your taxable income.
Oh, wow. So that's the taxable income part. Now, what about, let's say, if we had to do um, just like your bookkeeping wind up for the end of the year? Let's if just address that really quickly as we
So
wrap up.
So the bookkeeping part, that is that your CPA will take a look at that. But let's say, you want to make sure your P&Ls, your make sure your transactions are properly categorized and classified.
Hmm.
Now that means that the assets are under assets, liabilities are under liabilities. You're properly categorizing your contractor fees. So a lot of business owners have contractors they hire. They make Zelle payments to, or some other tool they use to make payments for their contractors. So those are complete 100% write off, right? So contractor fees being properly categorized. Bank loans, if you take a line of credit, if you take a bank loan out, principal, interest, properly bifurcating those items and properly categorizing those items. That's important. Um, and just making sure that everything is included, right? All the deductions. Your CPA will come up with a plan for the deductions, but they can't do that till the P&L and balance sheet is properly reconciled and categorized. So it's easy to go to a bookkeeper from a cost effective perspective. Just go to a bookkeeper. They'll put it in shape. Then maybe they charge you a few $100 for it. But then the real value is the tax planning, where let's say you're looking at a 10 or 20 grand tax bill. we can help reduce that by 50 to 60% just by doing proper strategies and implementation.
Wow, I think that needs some kind of something. I mean, we need to highlight that. That needs to be highlighted. So it's a lot of strategically understanding how to maneuver with your tax opportunities and everything like this with your income deductions and such like that. So that's really excellent.
Yes, absolutely. Yes, you're right, Emily. It's all strategy, it's all planning, it's all working with a good accountant, bookkeeper to get the things in order.
Wow. Well, Assad, you've covered some amazing things today. And as I always say to people, it's worth kind of just going back, taking your time, listening a few times to some of the details to really understand what's being said. And then again, determine what applies to yourself versus now versus later, what's relevant today versus later on, or at least being aware for the future. So, those are some of the key things that I encourage people to be aware of. So I want to thank you so much, Assad, for sharing these wonderful insights. Any parting tips that you want to highlight for people to, make sure you go out and do this today? What would that be?
Oh, well, number one thing would be make sure you go out there and have a proper accounting for your revenues, your profits. I'm not talking about your bottom line. I'm talking about how much revenue you made this year, and how much, and making sure you are keeping track of your receipts and expenses. If you have your bank statements, take those bank statements to a CPA. Ask them, if am I on the hook for a major tax bill? If you are on the hook for a major tax bill, what can I do right now? It's end of the year is here. 1231 is coming up. What can we do? Can we do a late S corp election? Uh, and if you do need to do an S corp election, we can help you with that. There's workarounds. There'll be some penalties and interest for missing those payroll payments, but there is workarounds still possible. So number one thing would be leave everything. If you're in the middle of making new deals, new sales, stop for a minute, take about 5 to 6 hours on a Saturday or a Sunday, get your financials together, and go meet a tax professional.
That is excellent. Excellent advice. I want to thank you again, Assad, for all that you've shared. We certainly could talk to you all day. That's why people need to book to see their CPA so they can ask the questions that are pertinent to themselves. So, as anyone, if they wanted to know what to talk to an accountant about, you've given them so many reasons and points that need to be covered to make sure everyone's bases are in order. So, I want to thank you again so much for everything that you shared today. And as we wrap up today on Momentum Monday, I just want to remind everyone of some upcoming events. So next week, I'm going to be sharing about our distraction elimination challenge coming up on November 28th and 29th. Make sure to sign up. The links will be below wherever you're watching this, or if you're listening in. November 28th and 29th, 2023, to help you sharpen your focus and simplify your priorities. And on next week's Momentum Monday, I'll be highlighting how to prepare for this challenge, how to best take advantage of it so that you can really set yourself up for the success that you need. And putting in place some of the things that Assad mentioned requires that focus and making your accounting a priority among your priorities, and making the space and the place for that. So that is what I'd like you all to do. Make sure you sign up for that. Okay, and then the next thing I'd like you to do is I'm going to leave you with our thought for today, which is you are a winner. You need to say this to yourself, that you are indeed a winner by staying committed to your purpose. You're a daily winner by showing up for yourself, as I've highlighted before. This is one of our supercharged positive energy thoughts. And seeing yourself from that winning light, you will continue to win and continue to do excellent work. So, with that, I want to thank you all really for being here with us. And I encourage you to stay supercharged and come back next week for more of Momentum Monday Supercharged with Emily. See you next week.